right, folks. Thanks for joining us tonight. I'll just share my screen. As usual, there's a manageable number of us tonight, so if you do want to jump in, don't feel like you have to wait till the end. Just jump on in and ask questions. But failing that, I'm just going to power through it all, and there's an opportunity at the end if you want to ask questions and so on. So it does continue to be an interesting time in the market. Okay, let me deal with this. Go away so I can see things. All right, so obviously we're looking at August compared to the last couple of years, looking at the trends and so on. I've been saying for a few months, if you've been following, coming to these meetings or indeed following my little videos, I've been saying that values in Wellington have been stabilizing. Over the last year or so, we have had a bit of a rough time again. Wellington City has been rougher on average than the region. But as we've come into winter, we saw a bigger drop-off in new listings coming to the market than is normally the case, even though it's typical we see that in winter. We saw a steeper drop-off than normal. And so listings, the flow of new listings to the market was really more constrained than is typically the case. That makes buyers feel a bit anxious that a choice is running out because it's the new listings that they're paying more attention to more than the gross quantum of supply. And so that can make buyers feel a little frustrated, and so they start circling back around and looking at other things that they have previously discounted. And so on. And so we saw values stabilizing and the market generally improving a little bit, or getting less bad, maybe I would say, or becoming a bit more neutral. Still a buyer's market. There's still a ton of stock out there. So overall message to sellers is that in the face of the tighter new listings coming on in the last 3 or 4 months, we have seen an increase in listings in August, which is a little early than we typically see for the spring rush. But when I say an increase in August, I mean compared to last August, the number of new listings coming on this August still doesn't match what is typically the case for an August. So more than last August. So that doesn't look like great news for sellers, but still not up to typical new listing volumes. So maybe it's a bit of a false negative, if you like. Obviously, one data point doesn't make a trend, so we will see. Message for buyers continues to be the same, and that is there is still a ton of choice out there, for heaven's sake. If you're a buyer out there, I strongly recommend you do not wait for things to get better. Is it possible that prices come down? Yes, it is. Is it more likely that in the next few years prices take a big upswing and a big increase, or a big decrease? More likely a big increase. How much? What chance is there of there being a significant price drop? In my opinion, remote. I think there's a reasonable chance, on balance, that our prices might go sideways for another year or two, possibly longer. But obviously we have interest rates dropping. We will have unemployment having flushed through the system. So that negativity will go at some point soonish. And did I say immigration? Yeah, in immigration. So I think the next big move will be upwards. I'm not suggesting it's going to be in the next few months, but I just think, what's the risk if you buy now? Is there a risk that it will materially decline from here? I don't think so. So let me just make sure that no one else. Good. All right. So median sale price 740,000 in August versus 795 a year ago. That is quite a big drop, 7%. All right, just let someone in. Obviously, as I've been saying for about coming up 3 years now, about 3 years now, the median prices have been going sideways. You'll see the trend there, the red line, broadly sideways for 3 years. Now, having said that, look at the blue bar chart. You can see we have seen declining median sale prices over the last 4 or 5 months or so. And interestingly, at 740, as I say here in the starburst, that is the lowest median sale price we've seen since July 23. So July 23 was 733,000. Obviously, July 23, just over 2 years ago. And that was the lowest median sale price we've seen since the peak in late 2021. Now, interestingly, July 2023 market was actually quite good. Things were firming. Underlying values, according to the Real Estate Institute House Price Index, were increasing as supply was really constraining. Vendors were on strike as we were heading towards the election. So that's why, well, I suppose that's evidence of why I don't pay too much attention to median sale price, because it just seems to bounce around all over the place, and the better guide is the Real Estate Institute House Price Index. But it is interesting, isn't it, to see these changes. The broad trend, I think, is more instructive than the individual monthly results, and as you can see from the red line, it definitely has been going sideways for about 3 years. So Real Estate Institute House Price Index, here's the league tables. We have still fallen further than any other region in the country. That's the bad news. These things obviously don't change fast, but look, Auckland remains not far behind us. But certainly, yeah, we have fallen further than anywhere else in the country, without a doubt. That hasn't changed. And these numbers, 25%, 26%, they've been reasonably consistent again for quite some time. A year or 18 months ago, it was perhaps more like 23%, and we've suffered a bit since then. As I said, we've had a soft market again for about the last 12 months or so, but now it's kind of stabilised broadly. Over the last year, we are not the biggest loser. We are the second biggest loser. So yeah, but if you look at the numbers there across the board, broadly speaking, they are really small. So down 1.1% for Wellington, up 0.4% for the country. Auckland flat at 0. We're talking really a mixture of very small numbers over the last 12 months. Over the last 3 months, this is interesting. So New Zealand overall down nearly 1%. And if you look there, I mean, Wellington down 0.5%. By no means are we the biggest loser over the last 3 months. So there are many regions around the country that have had values decline by more than 0.5%. And interesting that all of those negative numbers, that whole range of negative numbers there that I've highlighted, that's all the North Island. And the South Island is pretty much in positive, albeit small, positive territory, the exception there being Southland. That's negative 0.1, let's call it 0. So it's just been interesting, in particular over the last 3 months, a market of two halves, North Island, South Island. That's been a trend, a theme, I should say, that has definitely carried on, has been the case since the peak, really, but I've never seen it quite so clearly defined as those numbers show us there. So Wellington has dropped, yes, but has not dropped to the same degree that a lot of the rest of the North Island has. So it's nice to not be the worst performing market in some regard. Let's look a bit closer then at Wellington. You'll see, if you're familiar with these videos or these meetings, I've added another line in there in the graph. So the blue line shows the monthly results. The orange line shows the cumulative 3 monthly results. So that's the results for the 3 months. And the grey line shows the results for the preceding 12 months. So it's an annual change. So you can see there the terrific drop away. Obviously, the annual change doesn't get fully realised until we've seen some time pass, of course. So the market began to stabilise around here in this July area. From there, we did drop further, but it was starting to stabilise, and then we were still going down, but the degree to which we were falling over that 12 months was much less, and that is because the monthly results started going positive, 3 monthly, until we were in that period of time before the election. As I've said many times, everyone thinks selling before an election is a bad idea, and that's exactly what makes it a good idea. As you can see here, the market recovered. After the election, the market deteriorated again quite significantly. So look, there's no question, values in the last 3 to 4 months have stabilized. We were down here in negative territory. And then you can see all three lines converging back up towards the x-axis, meaning zero. So we're all converging basically to zero as demonstration of a stabilized market. Over the last year, there's been some weakness over the last 12 months, but the degree of weakness has been easing. And again, that's just clearly visible there from the graphs. Over the last 3 months, again, bit more variability, or quite a bit of variability from positive to negative, but you know, all a bit different, I suppose. And overall, at negative 0.5, not dropping very much. If we looked at the 1 month there, you can see really quite mixed with a couple of negatives, but only very small. Overall, a small positive. Again, I find that the graphs and the shape of the graphs is more instructive than analysing any one of these particular numbers. They're all heading straight back towards zero, which of course means stability, parity, no growth, no falling away. Wellington City has suffered a little more. You see there that the grey line there, we've been down below the x-axis for a bit more of a prolonged period. We tend to have slightly deeper troughs, slightly higher peaks, and so on. So there's no question the city has been weak compared to the overall region. But again, the theme is still the same, heading back towards parity or stability. So number of new listings, and this is the interesting data point really, in my opinion at least, 532 new listings coming to the market. We have for some time sort of seen a contraction of new listings, particularly over the winter time. But in this instance, we've seen 12% more listings than we saw last August and 15% more than the August before. So at first glance, that doesn't look like great news for sellers. Obviously, the more listings coming to the market, the harder it is to attract the attention of the buyers. But if you compare it to what we typically see in August, we're still short. So although it's more than the last 2 Augusts, we're still seeing fewer new listings coming to market than we typically see. So it looks at first instance like this is not good news for sellers. More competition, to spread the attention of the buyers across. But when you compare it to what's normal, it still looks like the number of new listings is relatively low. So let's just see what September brings. And the other thing to point out, I suppose, is that we have seen a little bit of an uptick there. You can see from July to August an increase in new listings there, the last 2 blue bar charts, or last 2 months results there. That is a little atypical. We don't normally see August new listings going up. It's normally September when we start to see the spring flush of new listings coming to the market, if you like. So there was a little bit of an early uptick. And there it is represented the other way compared to 12 months prior. You can see for the most part, we've had new listings coming on that were greater than 12 months prior until the last 6 months, where we've seen new listings dropping below where we saw 12 months prior, and this August result being a bit of a turnaround from that trend. So let's see if indeed it is a new trend or if it's just an outlier. On the other side of things, let me just let someone in again. On the other side of things, number of sales. And so again, you look at that red line, we've seen gradually increasing levels of sales, numbers of sales taking place, admittedly from very, very low levels. I sort of broadly consider that between 600 and 800 a month is the normal range for Wellington. And we've been down under 500 for a number of months back there, sort of 2 or 3 years ago. So we have been recovering, albeit very slowly and albeit off very low levels, but the recovery has been fairly consistent, as you can see there from that red line going up and to the right, not steeply by any stretch. But this is, again, a bit of a buck in that trend, 520 versus 576 last August. So that's 10% fewer, 533 2 Augusts ago. So about the same as we saw 2 Augusts ago. Yeah, that's not a positive sign. Again, is this a one data point thing, or is it a new trend? From a seller's perspective, we hope it's not a new trend, that it's a bit of a blip. And again, yeah, so unfortunately, not only is it down on the last couple of Augusts, but at 520, we're well short of the number of sales we would normally see in the month of August at 613. So it is definitely a bit of a mixed picture here from a perspective of sellers. And there it is in the other format compared to 12 months prior. So we were seeing, broadly speaking, over the last couple of years, as you can see, the blue bar chart and the red line graph has been above the x-axis. In August, we're below the x-axis. So fewer sales than 12 months prior. Again, is it enough to prove a trend? Not yet, but so let's see what happens next month. How long is it taking to sell? Still a long time. So look, you can see over the last 4 months, we've been 50, 54, 53, 51 days. This is a long time. There's no question about it. No, there's no kind of hiding that fact. Compared to August average of 38 days, what's that? 13 days longer than normal. So 34% longer than August norms, as I say there. Yeah, look, no question about it. It is taking a long time to sell properties on average. The red line there shows the kind of moving average there, and you can see at least it's kind of broadly stable over the last 8 to 10 months or so. It's not getting any worse. So fingers crossed. Inventory, 16 weeks versus 14 a year ago, 11 2 years ago. 15 weeks is the long-term average there. And so at 16, my apologies, I've got an old version of this slide here. So the August number is not here. The August number would be up here a bit. So 16 weeks, just longer than the long-term average of 15. That on its own would lead you to believe that we're in a roughly balanced market. It sure does not seem balanced. It definitely feels like a buyer's market, and I'm pretty sure everyone admits that it is. But by this stat, 16 weeks versus long-term average of 15, it's pretty balanced. But over the last 10 years or so, the average has been 10.4. So 16 compared to 10.4, it's a lot more inventory than we've seen in kind of recent living memory, if you like. So that's consistent with our experience of it being a buyer's market. Number of Trade Me listings. So I was saying before that we had seen quite a significant drop-off as we came into winter, and there you can see the Trade Me listings coming down there. Interestingly, September and August Trade Me listing volumes are pretty much essentially identical, whereas we would normally see September results continuing to come down a little bit, certainly at the start of the month anyway, and then starting to go up towards the end of the month. That perhaps is a reflection of a few more listings coming on than we typically see in August, and that fewer sales taking place in the month. So 2710 versus 2534 a year ago, 1843 2 years ago, obviously way more than 2 years ago. As I said, that was basically on the eve of the election, and the vendors had been going on strike, so supply had become quite constrained, or relatively, compared to the 6 or so months prior to that. And we're at, obviously significantly more listings on the market than we saw at that time, and still ahead of last year as well, only by 7%, but nonetheless, yet more listings than a year ago. And there is another format. So we saw the degree to which we were seeing more listings on Trade Me was coming down, and then in the last month, it's gone back up again. So we were back down to roughly parity in July and August, but in September we've taken that 7% lift again. So in summary, folks, values overall have been stable. They've stabilized recently versus 12 months ago or so, but we have seen the lowest median sale price since July 23. New listings are up versus 12 months ago, but still less than August norms. So that's a bit of a balanced picture. More new listings compared to a year ago seems like bad news for sellers, but still less than August norms. So it's a bit of a mixed news report there. Sales volumes down on 12 months ago. No question that if that trend continues, that is negative news for sellers. Duration to sell remains quite long at 51 days. Inventory is only just above long-term normal trends, but certainly considerably longer than what we've seen in recent living memory in the last 10 years or so. Trade new listings are up a little bit versus last September and identical to last month. As I said at the start, message for sellers is that the more new listings might make it tougher again if indeed that trend continues. Too early to say. Although I have to say we're seeing plenty of listings coming on. I think yesterday we had 25 new listings at Low & Co. We're about 25% of the market. So if that's reflective of everyone else, that would have been about 100 this week. That's a lot for a week. Buyers, there is still plenty to choose from, so get in amongst it. And as I said at the top, I strongly would recommend, if you are looking to buy, do not count on things getting materially better than they are today. Is it possible that prices could come down further? It's possible. Is it likely they're going to come down by very much? In my opinion, highly unlikely. Big thanks, of course, to Real Estate Institute and realestate.co.nz for the data. Happy now to take questions or discussions or observations or whatever you need. That sounds like we're done. One last chance. No, all good. All right. Thank you so much, everyone. Thanks for checking in. If you want individualized advice, of course, just reach out. Happy to help. Take care out there and hope to see you again next month. Cheers.